Okay, on to my next pair this morning for the 11th of March 2019 is the pound against US dollar. So, this one, pound. Okay, yes, March, we're the 11th. We have now got another, 18 days to go till the 29th. Super important. Okay, we're getting closer and closer to D-Day. 29th of March of this year is Brexit Day, D-Day. Okay, and there's a lot of uncertainty still, guys. A lot of uncertainty. Okay, I cannot emphasize there's still a lot of uncertainty with Brexit. So if you're trading any pound crosses, please understand that you're trading a pair that has a lot of uncertainty attached to it. Therefore, you're going to see a lot of volatility, speculative volatility. Okay, it's speculative. We're speculating. A lot of people out there are speculating on the outcome of what Brexit is likely to be. Okay, the closer we get to D-Day, the more unlikely we come to some sort of deal. This is having a major impact on any pound cross. Okay, and we can clearly see that playing out on price actions so far this month. Okay, and it would rightly make so. It makes sense because we are that much closer to the D-Day, and we still have no bloody clue what it is that we are likely to get from the Houses of Commons. Yeah, the European Union is screaming and jumping. The Northern Ireland group is Ireland. Yeah, everybody is very tense at the moment. Okay, and I'm just going to bring something onto the chart over here. I think I can just bring it. There we go. So this is taken out of a newspaper, quite an important one. However, quickly, how will May's 3 days of Brexit votes play out? Okay, so tomorrow there's an important vote. Okay, I need to emphasize this, guys. Okay, yeah, if you're trading any pound crosses, you need to understand the risks, implications of trading something currently due to the importance of Brexit. Okay, so here again, tomorrow we have the MPs voting again on Theresa May's deal. Okay, and if people like it and they say yes, then the Brexit with May's deal on the 29th. Happy days. If they vote against Theresa May's deal, which is more likely to be the case, then we go to Wednesday, and they're going to vote again in the House of Commons whether to leave without a deal. There again, the MPs have stated categorically that do not want to leave without a deal. So this will probably get voted down, which means that this probability won't happen. They'll say no, which means that now we have to go to Thursday for a vote on whether to extend Article 50. Now, people don't really want to extend Article 50 because that means we're still trapped in. So, the likelihood of that extension taking place for the large majority of the MPs in the House of Commons, which is likely probably to fail, which means that we won't say yes, which means that, yeah, you get an extension. They'll probably say no, which means that we're stuck in a deadlock. Okay, and this is not going to be great for the pound. Okay, this kicking of the can down the road to oblivion is not going to have a major especially this, if it does say yes in extension, we might see the pound actually jumping high. Any of these yeses would obviously see the pound rallying to the upside quite aggressively, which would be great. I mean, for us as traders. Any of these that say no, yeah, well, you can just read that. Okay, read into that, and yeah, understand what it means, and understand what the impact would likely be on pound crosses if anything's or yes or no. Okay, that's what I'm saying to you. So understand that. That's the importance. That's going to be your homework for the whole of March, guys. I cannot emphasize it. Okay, but getting back to the picture here, you can see that the matrix straight away is predominantly red. Okay, there's a bit of uncertainty here on the weekly and daily in particular, but the 200 period moving average on the MA over here is predominantly above price, except for the daily. Okay, we've seen a move higher just recently, and the daily is still projecting that. Excuse me. But the emphasis over here is negativity because, yeah, it's clearly looking engulfing at the moment on the monthly time frame. That 20 period moving average has been a major sticking point for price throughout 2018. We actually saw last month's candle closing higher on it for the first time, which gave us signs that, okay, great, yeah, there seems to be an underlying positive sense, because a lot of investors were thinking, well, the longer we go without getting any agreement, more likely is people don't want a no deal. So the likelihood is we are either going to get an extension or we're going to get a softer Brexit deal. Either way, investors see that as a positive. If we come away with no deal, that would be, yeah, that would be catastrophic. Okay, which is not, and we're starting to see signs of that sentiment now starting to play out, because they're thinking, well, hang on a moment. Yeah, we're going to go to a deadlock potentially, and this is causing a lot of uncertainty. Okay, what we're seeing on the chart now. So clearly at the moment now, what we wanted to see through the month of February was certainly price remaining, March, apologies, was for price to remain above the February high, but also to remain above the 20-period moving average. Because if you stayed above the 20-period moving average, then we start to see that building process, which then took us up towards the 50-period moving average here back in 2017. Look, we're still into 19 days of this month still to go, but this month is going to be so super important for the life, for a generation or generations to come. Okay, so the importance of this candle this month is going to be super important. Okay, so if you are trading any pound crosses, please understand the risk, because you're going to see a lot of volatility between now and the 29th. You're going to be speculating tomorrow, Wednesday, Thursday, heaven forbid, if we get a lot of no on any of those votes that we like to see take place in the House of Commons. So please understand that. If we look at the overall picture, notice here, price is currently trading lower than the weekly pivot, lower than the monthly pivot, lower than the 20, lower than the 50. Okay, and the 200 is way up here, so we are trading negative. Okay, there's a lot of uncertainty. RSI, even though we've had a pullback, which is reflecting, there's still ceiling here at the 50-period moving average, which is negative because the RSI is now pointing down. The MACD, okay, is now flat. Okay, one could argue that the fast line is above the slow line and the histogram is currently above. Yes, but we're flat. Ideally, we want to see trend. Okay, where the histograms are nice and evenly spread out and the moving averages are nice and evenly spread out. We don't have that currently. Okay, so that's another risk implication. But we understand that there's a lot of risk attached to this because we're going into a month where there's a lot hinging on the outcome at the end of this month. Okay, so we understand that. And you need to understand that as traders. Down to the weekly. Now this is where we see the matrix giving us a bit of hell. MACD is positive. The RSI is above the midpoint. Now if we look at those two just to start off, you can see the MACD, fast line above the slow line, yes. Histograms above the midline, yes. And the RSI is above the midpoint. So our relative strength of price is still reflecting up. Our MACD is still reflecting up. And if you look at it, we've come from a low point and we haven't been driving high. But last week's candle close hasn't been a great one, especially after the prior week to that, driving higher than the previous resistance level, i.e. above the 50-period moving average. And look at that. We've been trading below the 50. So 2 weeks ago when we had that breakout, I was emphasizing that we should be looking long. But if you look at the candle, we didn't get any buyers coming to the market, to the table from the word go. So from Monday last week onwards, nobody was interested in actually holding the pound. Everybody was selling it. So which led to the fall below the 50, the fall below the monthly pivot, which was not great. So therefore, the target would have been the 20-period moving average. Now we know that the 20-period moving average on this particular pair over time has either been a fantastic resistance of price or a support of price. That would have been an ideal target intraday towards that level. Now, you'll notice that price is now hesitating or consolidating around the 20-period moving average. So now if you look at what's happened recently, we've had a high here at the underside of the 50, okay, resistance. We've got a high here, which is above the 50, but still trading in around that same level over here. Notice the RSI. Okay, it's flat. And ideally, if the RSI is carrying more underlying strength, in this case, positive strength at this particular point of view because it's straight, then we'd like to see a continuation. But the RSI failed to make a new high. Okay, if I just draw a line in the sand over here. There you go. In fact, it's slightly weaker than the previous one, so we have divergence. Not a good sign if you're looking for ups. Okay, so that's another sign that we need to be vigilant. So as it stands at the moment now, this week's going to be super important, guys, because we have a bearish engulfing candle. It's engulfed the whole of last week's fantastic breakout above the 50, which is not a good sign. We're trading below the monthly pivot, the weekly pivot. Okay, we're trading above the 50, we're trading above the 200. The only one we haven't trading below is the 20-period moving average. Everything else is still negative. The RSI is above, just. Okay, the MACD is still positive. Okay, but we're seeing a slowdown in that momentum. The histograms are clearly weakening here on the hard right edge, which emphasizes that there's a shallow buying. There's less buyers now on the hard right edge. But we've got a bearish engulfing candle to emphasize that there's still a lot of uncertainty. Because even after a nice prior 2-week breakout to the upside, we're thinking happy days. We can see potentially this now being mimicked over here. That failed to materialize because of last week's close. Okay, so this is the reason. Even after a very strong break high, we were looking for that continuation. So Monday, Tuesday, Wednesday, Thursday, Friday of the prior weeks, or last week, apologies, we were looking for that continuation high. We never got it. So we shouldn't have actually been in this trade to the upside because we didn't get Monday making a new high compared to the previous Friday, which then gave us a continuation. Okay, so as it stands at the moment now, more weight to the high right edge to the downside is the problem at the moment now. So this is the reason. So if that's clearly the case, we need to see macros. So now, there again, hence the reason why I brought this into the equation. That, because we have this to look forward to tomorrow. And if we don't get it on tomorrow, then we have to look forward to Wednesday. And if we don't get it on Wednesday, then we have to look forward to Thursday. Okay, and what happens after Thursday? We still haven't got... Yes, that will then obviously push things to the downside. Okay, so the super importance of here is if you're trading any pound crosses, yeah, treat them with respect this week. Rather you give more to the market, okay, than to be super aggressive, trying to speculate, because that's what we're pretty much doing. We don't actually have anything on paper that's legit, that people in the European Union like, and people here in the UK are like as a whole. Okay, so yeah, it's speculating. It's speculative. That's the reason why we have all this volatility. So yeah, if you are trading any pound crosses, understand that you're trading with far more risk than you should be trading, because yeah, the uncertainty, or the speculative uncertainty of where Brexit lies is the major driving force. And all you're going to see is a lot of whippiness. People are speculating. Okay, dumb money. Not good. So just keep it in mind. Down to the daily. Now you see on the daily, now we have the RMO, which is the rudder of the ship, which is looking positive, and then we have the 200 period moving average above price. Okay, sorry, below price. Apologies. And then you can see that 200. There it is. Okay, so now we can see there's a fall from grace over the last couple of months. Happy days. If you look at the monthly pivot above price, weekly pivot above price, the daily pivot above price, the 20 period moving average above price, the 50 above price. These are all negative signs, but the 200 is still below price. We need to be below that level to be more of a decisive continuation to the downside. Excuse me. RSI is negative. MACD is negative. Okay. The concern over here is, yeah, we don't have price trading below the 200 period moving average to be more of a decisive continuation to the downside. So here again, this week, and you can see where I drew my line, and we need to be below that. So this area over here is going to be your Bermuda rectangle of trading. Don't trade. Give that to the market. Okay, if she's still carrying weakness to the downside, give that to the market to give you a more decisive indication of downside movement. Because if you took the bodies of this and you put it over here, you can still see that price is currently trading this intermediate swing high. Okay, because we came from a low point. Remember, here in December, we swung high, and now if you took these two levels over here, draw a line at the bottom of them, you can see it starts to dissect right now where price is trading. So if we are to get a negative aspect, we need to see price driving low. We'd like to see a pullback and then a continuation down towards, certainly towards the December lows as our first viable target. The closer, or the more we go into this week, if there's still uncertainty on the Brexit votes within the House of Commons. The other scenario is everything looks fantastic. We start to see yes, and then we start to move back up again. Either way, yeah, tomorrow's first vote's going to be super important in terms of giving us an idea of where the vote lies, or the sentiment lies within the House of Commons. Okay, so please take that on board, guys. Cannot emphasize that this week is going to be super important in terms for us as traders looking to kind of look for opportunities to trade pound crosses with less risk. Okay, there's super amounts of risk attached to this. We're trying to limit the amount of exposure to risk and to maximize our exposure to probability to the upside or downside. Okay, at the moment now, Brexit is a concern, so this week's going to be super important, so please pay attention to that.